Today I want to talk about one of the more aggressive positions of associations in dealing with the foreclosure debacle that's going on here in Florida, and that is the issue of what to do when a mortgage holder forecloses and the association is owed money. Maybe as few as let's say 18 months ago or even a year ago, standard accepted practice, at least in my office, was to wait for the mortgage holder to foreclose, because even say 3 years ago there would be an overbid. In other words, the amount of the loan would be less than the property was worth. There'd be competitive bidding at the sale. There'd be money left over, and the association would then make its claim as a superior claimant to everyone except the first mortgage holder. When the sale was over. Now just about everything is upside down. Nothing has any value over and above the amount of the mortgage. That's the bad news. The good news, if you want to call it that, is that lenders or people who take a legal position that they're entitled to foreclose are taking anywhere from 12 to 24 months to actually foreclose. And as a result, that delay allows the association to come in and consider whether it's cost effective to actually go through the collection process, which would be demand letter, lien, and foreclosure in county court, which isn't quite as clogged as circuit court, because any litigation that involves matters over $15,000 have to be done in circuit court. That's where all the mortgage foreclosures are. The association lien foreclosures are in county court, where things can move a little faster. The point is that if everything goes well, the association is in a position to foreclose prior to the time that the mortgage company can foreclose. When you add to that the fact that the association has the right to go after the rent if the unit is occupied by a tenant, and the fact that it's likely that the association can take title prior to the time that the lender concludes its foreclosure, usually by a factor of anywhere from, say 6 months to 18 months, because a number of foreclosures in my office have been ongoing mortgage foreclosures for over a year. It makes sense to consider whether it's worthwhile to pay, say, a limit of $1,500, which is what we do in my office, which includes fees and costs. Remember, the costs are court costs, such as about $350 to file the lawsuit, $250 to pay the title company, which does certain analysis over and above just the raw title search, so we know who to sue and so forth. So it costs about $600, $700 in hard money to foreclose by the time you're done with it, and the rest would be legal fees. But you have to consider the value of that against the ability of the association to rent the property at whatever it can get for the property on a 7-month lease with contemplate maybe a 60-day kick-out clause in case the first mortgage holder starts moving with its foreclosure and threatens to divest the tenant of the occupancy. The fact of the matter is the association doesn't have to pay the mortgage, because the mortgage is a security instrument, not a promise to pay. The association doesn't pay real estate taxes, because why would you? The association doesn't pay casualty insurance. Yeah, I think you would want to get liability insurance, but frankly, if the place burns down, who cares about the contents? And besides, the cost of insurance would be prohibitive. So the bottom line is every board needs to make a vital decision. You can either bleed to death and let the association fees rack up, or you can move aggressively and take a limited risk in order to be able to obtain title. And in fact, there are a number of investors who are willing to actually buy the quitclaim interest of the association through a quitclaim deed. That's basically when the association gets a certificate of title. It prepares a quitclaim deed in exchange for payment of the judgment. The association gets paid, I get paid, everyone gets reimbursed, and then that new owner is responsible for the ongoing assessments and also maintenance of the property and so forth. There's a number of investors who are doing that now, and of course they're not going to pay the mortgage either. Their idea is to try and buy the note and mortgage for, say, 25 to 40 cents on the dollar. So there's no, I often say to clients, if I could wave a magic wand, what would you want me to do? And the waving of the magic wand would result in having the owner pay the assessments. Well, that's not going to happen. So it's a question of what's the least worst outcome. Is the least worst outcome waiting for the mortgage company to foreclose? And in doing that, you're out, 6, 8, 12, 20 months of assessments, or do you consider being aggressive and moving forward? That's a business decision. That's something that every board needs to consider. No one can see the future, but it's quite likely that if you're aggressive, the other reason that you want to consider that, and by the way, it's the moral hazard of not paying. But what I was going to say is some lawyers advocate filing a cross-claim for damages against the delinquent owner. I think that's a waste of time and money. You have to pay filing fees for that. You're going to get a judgment. In Florida, judgments are worth very little, especially if the owner of the property is willing to let a piece of property worth a couple $100,000 go down the drain. What good is spending $2,000 in legal fees to get a $2,000 judgment that can't be executed against homestead property, jointly owned property, depending on how the property is titled, or other protected assets in Florida? That's just a waste of money, and I think lawyers who file cross claims are doing so to enrich themselves. Certainly, I don't think it's in the best interest of the client. It's just wasting money, and it feeds the lawyers. So we don't recommend that. We answer the complaint, or we'll move to dismiss the complaint of the mortgage holder. We'll try and delay that as long as possible. We speed up the foreclosure process on our part, and we get the rent. If it's rented, take title, make sure you have liability insurance, either rent it or hire someone to rent it and operate it for you, or sell the judgment, or lock the place up and let everyone know that you're not going to stand still for people living in the community without paying anything. So these are tough times, and make the best of it. See you next time.